Um, I am Nonoy Oplas, columnist of Business World. I'm looking at the overall. I was a little bit puzzled because Ayala Corporation is mainly the main business is real estate. It's not so much about power. Real estate, so you have big malls, and from Negros you have a big subdivision there. Ayala and the mall, you have the big mall, about same size of Trinoma. And Negros is suffering a lot of frequent brownout. So I think that since your main business is real estate, you should have cheap and stable electricity. But I was wondering why Ayala went into wind, which is unreliable and expensive electricity. For instance, the Kapal is now 9 pesos, 10 pesos per kilowatt hour because of it. So you have a real estate main business with needing cheap and stable electricity, and you give one into unstable electricity, expensive electricity. So I just wondering why you have that kind of sort of conflict in overall corporate philosophy. Thank you.
Yeah, thank you for that question. No, we don't see it as conflict. No, we see it more as what is sustainable. What do I mean by this? Investing in renewable energy, it was you have to start at some time. It's a judgment call. My father in the 90s is my favorite anecdote. When personal computers were fledgling, advised me not to buy a computer yet, because next year it will be better and cheaper. And now he's 88 years old, he still doesn't have a computer. Where do you draw the line? I bought my first computer in 1995. The Philippine government, you can argue it was a very expensive computer, right? The Philippine government decided sometime in 2008 to say, okay, Renewable Energy Act, this is going to be, we will support renewables because it is the future. The time is now. There's no perfect time. Okay, so that's point number one. There is already a policy decision. We were not in power back then. Now, we saw that, okay, now that there's policy decision there, you can participate. We know the long-term objectives of the government. It's a kickstart program, right? It's an investment, because you need the capability, to build solar plants, wind farms, right? The government did the right thing, which is it's not unlike other European countries, they didn't cap, the number of megawatts. So you see a boom in solar and wind with very high feed-in tariffs, 20 pesos, 15 peso equivalent. And that caused problems. The government, credit to our policymakers, learned from that lesson and said, okay, let's cap it. Let's cap the, not only the price, but let's cap the megawatts. And that's fine. It's a de facto subsidy. There's no secret about it, but it's an investment, to enable the future. Leon, everyone talks about Leon as a poster child of solar, etc. Will Leon be able to offer the $299 now if he didn't do if he didn't benefit from a feed-in tariff and build experience in solar plants? It's a simple question, right? Do you think he'll be credible, without experience in building a solar plant because there was no feed-in tariff, and now suddenly he says $299 Meralco, buy from me? He won't have credibility, right? So anyway, I think that's the point. We saw it as a long-term move. We think long-term, right? Yes, it's a short-term investment. Short-term outflow, but it's a long-term investment. There will be payback. There's already payback in terms of the spot market price, as I explained earlier. But there's even a longer-term payback, because now you have a lot of companies, capabilities, like us, who can now take advantage of these technologies that are dropping. And mind you, it does take time to scale up. Now that we have experience, thanks to the feed-in tariff system that enabled us to gain experience in solar and wind, now we can prepare for the future. We know what we're talking about. Okay, now we can start looking for cheap land, near the grid, start building our capability in storage, etc., and negotiate with these contractors for better rates, etc. We won't be able to do that if not for the feed-in tariff system that enabled and jumpstart our initial investments. So that's how we view it. Now, we are not holier than thou and say, because it's clean and we don't want to pollute, so we will not do coal plants. No. On the other hand, we also know that, hey, it's expensive. We cannot do 10,000 megawatts of solar. We would. I promise you, we would if they cost 3 pesos or lower. We would build 10,000 megawatts if there was land, connection, etc. We will stop building coal plant if solar and storage and land and transmission are all there at that price. I can guarantee you that. No, that will be our strategy. But the reality is different. And in the meantime, you have a need. You have a growing demand. So we do need to still build coal plants. We'll do it again in a responsible manner. So we will invest so that we manage the impact on the environment. So again, it's a portfolio. We want to look at it from a holistic and a long-term perspective. And the malls now are benefiting from all of these investments. And the power prices that these malls are paying because they're 1 megawatt and higher are benefiting from the retail competition. The average price, a mall, it is another good anecdote. Malls are the worst type of customer when it comes to load profile. I don't mean personal customers. I love my friends at Ayala Land. But as a load profile, we hate it. They consume during peak hours, right? Power players want base load, right? But malls, 15, 20% load factor, that's the worst. They only consume when everyone else is consuming. It's like driving in rush hour. So, and yet, I was wrong again. I thought malls in this era of retail competition, lagot kayo. Because, you will pay more expensive than what you're used to paying to Meralco. Yung utility, the captive charge. Why? Because you're effectively subsidized by the residential, to smoothen the load. So as a portfolio, Meralco can afford to charge the malls 4 pesos or whatever the generation charge is. But in theory, if you break it down, there's a subsidy. They should charge 3 pesos to the high capacity load to the plants, and they should charge 5 pesos or 6 pesos to the malls. Theoretically. It's one way of viewing that if you base it on load factor, right? That's what's another rookie mistake that I made. Arcoa, I was right. The plants, the factories are getting 3 pesos, close to. Malls are not getting 5 or 6 pesos. They're also getting 3 point something, or 4 pesos, not 5 or 6. Many of them, because of their scale, are getting cheaper than the captive utility rates, thanks to our thanks to competition. So let's view it from a holistic perspective and long term.
Yes, ma'am.
I have 2 questions. I'm Gladys Enriqueta. I was with NAPOCOR before. My first question is, your company was one of the 4 interested companies in the bidding for Malaya power plant. What was your company's plan in case you won, just to continue running it on bunker fuel? And my second question, which I also asked Meral earlier, what is your take on what Lantaw Group said in the previous lectures? They said that in the past 3 years, LNG fed combined cycle gas turbine has been increasingly competitive against coal, and in fact, in 2016, even cheaper for base load. So I would like.
So on that basis alone, it's worth a look, right? Obviously, it's not the most attractive at its current state. It's so expensive to run. Right. So, but if we had to, if that was the government mandate, then we have no choice. But we were looking at it from an optionality standpoint as well, which is, if the government agrees, we know it's not a guarantee, but back then, now it's moot and academic, right? Because they've pulled back the bid. But we thought that would be a good site for a thermal power plant, be it diesel, or gas or what have you, it's open to be studied. But we believe that while we are not clear about what specific technology, if allowed to change the current plant, no, we just thought that the grid connectivity had value in it, and we believe that ancillary services and peaking plants could play a role moving forward. That's our view. We doubt that it's a good location for baseload. I don't think you can put a coal plant in Malaya now. But diesel or gas for peaking, ancillary, pwede. So what we did, and I think it's in the public domain, what we did, since there's uncertainty in that bidding, we looked for available land near the area because there's grid connectivity there. So that's our plan B, if you will. No, so we still like to pursue. Again, it takes 3, 5, 7 years to build a project. I'm not saying we'll build that, today, right? But we want to be there in case, the bleak scenario in 2023 happens. At least we have a solution, right? And these are plans that you can build fast, like in a year. So having that as an optionality, is valuable. That's how we view it. No, it's just in case. Yeah. Now on your second question, on the gas, what are the facts? Historically, coal is cheaper than gas if you look at history. Now you have to look at two things. In a typical contract, again, utility model, coal, there's broadly speaking two components, fixed fee and a variable component. Fixed is, think of it as your capex, to recover your capex and returns, that's the fixed. And then there's operations and maintenance as well. Let's just simplify it and let's say that's all fixed. There's variable O&M, but that's maliit lang. And then there's the variable, which is fuel, largely fuel. That's coal. Gas is also a similar pricing structure. Historically, coal, I'm giving you rough orders of magnitude. That fixed component of coal on a per kilowatt hour basis, base load, assume you run 24/7, is around 2-point-something pesos per kilowatt hour. 2 to 3, okay, is the rough range of coal. And then the fuel price of coal, depending on the efficiency of your plant, it could range. When coal was trading at $60 Newcastle price, that's the benchmark, $60 per ton. Efficient plants can go as low as 1.2, 1 peso 20 cents. So you add that to your, let's say 250. Coal was at 350-ish. Look at your Meralco bills historic. I can guarantee you'll see Sem Calaca prices here, Pagbilao, etc., Masinloc, etc. Historically, was there was a time when it was at 3 to 4 pesos angle. But if coal price is at 100, where it is today, or in the last 12 months, which is a surprise because everyone is saying coal will settle at 60 to 70. Again, crystal balls are not perfect. It's now hovering at 100. The typical fuel price of coal is above 2 pesos. So you add that to your 2 to 3, look at your Meralco bills now, not your bill, the website of Meralco where they have the generation charge. Coal is close to $5 per kilowatt hour, right, today. Okay? Compare that to gas. Gas, I think Giles mentioned that gas, has got a capacity fee of about a little over 1 peso per kilowatt hour. So it's cheaper than the fixed capacity fee of coal. Why? Because gas is a cheaper investment. Not LNG, but I mean the power plant. Because it doesn't have a boiler. Mahal yung na. So gas is probably a little over $1 million per megawatt to build, 1.5 order of magnitude. Coal is in the 2 million per megawatt. So it's almost double, not quite double, but almost double the capex, for coal versus gas. So gas has a low fixed fee, low investment, lower, not low, but lower. And again, caveat, I'm not talking about LNG, I'm just talking about gas. Assume that gas is available, okay? I'm just talking about the power plant, not the gasification facility, But the variable cost of gas, okay? Gas is, there's many ways to price gas. Once upon a time, you link it to the Japan link index. It used to be $16, $18 per MMBTU. That if you converted it to price per kilowatt hour, assuming somewhere in the 45, 50 pesos exchange rate, that would translate to about 5 pesos per kilowatt hour. Fuel pa lang yun. Then you add the 1 peso of capacity fee that Giles earns. So you have 6 pesos base load. That's old data. No? But now, because of the revolution in gas, shale gas, etc., Henry Hub in the US dropped to $2 per MMBTU. So the benchmark now is, okay, what if you got $2 from Henry Hub, and then there's transportation, conversion cost. I'm not an expert, but orders of magnitude, you can convert that, delivered gas, you add probably around $5, $6, between shipping, gasification, liquefying and gasification, all in, assume that, and there, in that economics, you assume that that LNG terminal is built. So the delivered cost, roughly, is about $8 per MMBTU, right? This is the claim by some quarters. Now, I'm hearing mixed signal. Is that, Malampaya, I believe, is about $7 or $8. Malampaya is a different equation. It's linked to coal and a basket of commodities, mostly, oil, not coal, mostly oil. Since oil is relatively low now, it's about $60 per barrel. Again, when it was at $100 per barrel, Malampaya was like $12, $13, which is closer to 4 or 5 pesos per kilowatt hour, right? That's why if you look at your historic Meralco bills, gas, first gen's tariff was about 5 plus pesos versus coal at 4, 3 years ago, let's say. Ngayon, bumaliktad na. That's why Giles now is proud to say that gas is cheaper than coal. It's true if you look at the total cost, right? Today. Because, and you just have to go to Meralco's website and see how much are they paying for first gen. It's about 4 pesos thereabouts, and coal is closer to 5 because of these two components that I said, nag-intersect. Okay? That's why Giles, I think, is frustrated. Why is it that no one's contracting long-term gas since it's cheaper today? Okay, so here's my two. So I guess let me say a few things. Number one, when you mentioned Lantau saying deliver LNG $7 to $8, I don't know if they're referring to Malampaya or a price of LNG if LNG was in the Philippines today. I'm not sure what they're referring to, but when I asked some industry participants, they think that even at $2 Henry Hub cost, they still maintain that $6, $7, $8 would be the conversion cost. So in other words, the delivered cost of LNG today is gonna struggle at $7 to $8, even at these low LNG prices. The reality is probably closer to $9 or maybe 10. So there's a debate whether LNG can clear at $7 to $8 Malampaya type pricing, or at around 280, 3 pesos fuel cost per kilowatt hour. It's still a question mark. Assuming that it is true, right, that it is doable, then the second question is, what is your future outlook? It's, do you believe that coal will remain at 100? If the China policymakers are targeting 60 to 70, right? If coal goes back to 60 to 70, right, then coal will go back to fuel cost of 120, 130, 140, add that to the 250, you'll get sub 4 again. And then gas, will you believe that long-term gas will hold up at $7 or $8? So that's the debate. What does your crystal ball say? Not to mention, will there be long-term off-takers? Because how can you, this is the project finance, everything has long-term PPA, 3,000 megawatts. It's an ideal project finance model. Versus, will you go merchant? Will you put your balance sheet on the line and go ahead and risk billions of dollars in a terminal and then you don't know what's going to happen to fuel prices moving forward. That's the great debate. The last thing which I think is evolving is before, it's a take or pay, the gas. No? The suppliers will force you, unlike coal, where it's more flexible, or diesel, gas will, you're forced, use it or lose it. You're forced to buy, 50% or 100% capacity factor for 500 or 1,000 megawatts worth. Wow. Then I need to make sure that I'm intermediate or base load. Paano if the price doesn't clear in the market and I'm running a 20% load factor? You now have a stranded gas, stranded price. But I hear that the market today is evolving. Wala na masyado yung mga take or pay. Suppliers are realizing this, are taking shorter term contracts or more flexible contracts. But it's a rich topic. All I can say is I don't know the answer. But this is how I would frame it. That's why to me the solution is we need both. We need the portfolio. But if that is your attitude or my attitude, I will not bet big and go all in on gas, because if we're wrong, wow, it could bring someone down. So the more prudent thing to me is spread the risk. Don't go full blast 3,000. But first gen obviously has a different context, because they have more than 2 gigawatts of almost 2 gigawatts of gas plants. They almost have no choice but to make sure that the fuel is there. It's a very interesting and tough decision. What's going for Giles is that, as he said, I think he's been saying this frequently. His plant is already fully depreciated by that time, so at least there's a competitive advantage there. So hopefully that reality will be converted to enable LNG. So abangan, but that's an interesting dynamic to watch out.
You can accommodate as well. Yes, sir.
Jerome Kailan from first gen. So I'm
Do you agree or?
well, I like to
I
say,
think first gen. I'm sure they will succeed.
well, I happen to be the head of the gas business unit as well. So if you need to know more about gas, I'd be happy to.
You should have spoken up, so at least just defer to the expert. Who am I? I know little, but that's.
No, but I 65-70% of what you said, I agree. Don't worry about. Especially the point about the 299 of solar. I think it's dangerous for a solar player to actually be promising something which at this point is really not realistic. And I agree with what you said. Today it's really possible. Maybe 5 years from now. A lot of what you said on gas, of course,
They could agree with
disagree,
I'm not a gas expert.
but in terms of portfolio, yeah, I firmly believe as well that there's room for coal and gas in the Philippines as a whole. But anyway, my question is with respect to the recent move of Ayala Group, which is to separate the AC energy from the fossil fuel power generation group from the
Renewables, yeah.
Well, what's the thinking behind that, and what motivated that decision?
It's a company secret. I heard you. No, interesting question. Should have known that someone from first gen is here. No, anyway, we do acknowledge that we want to grow both platforms, obviously, both the renewables and the thermal business, number one. Number two, we do recognize after 6-7 years working in the industry, we do recognize that these are two very different businesses. One, conventional is more large scale and more reliable, predictable, and a lot of it is still in this long-term bilateral basis. But increasingly becoming merchant play. Renewables is still largely a feed-in tariff play, less reliable unless storage comes in, and then the obvious difference of the sustainability angle, the environmental angle. Related to that is we do recognize that there's a different set of investors who would be willing to invest and support renewables, but there's also a different set of investors who would be supporting large conventional projects. To mix both, at some point we will have to go to the market, whether it's an IPO or a partnering with a strategic investor and so forth. It will be hard. We believe that it's more efficient for us to look at our business with these two separate, distinct platforms. It gives us the flexibility and the focus not to grow our platforms because we can pick the best possible partner/investor in the event that we will need more capital or perhaps a partner to further scale up our two platforms. That's the reason for separating them. Because otherwise we would have taken it to the holdco level, and that eliminates a lot of turns off a good number of investors already or potential partners. So that's really it for focus and flexibility.
One last question.
Okay, ito na, yung mga
John
players.
Villalobos from Blanco Power Gen. Eric, what are your views in the impending oversupply in Mindanao? Especially that some of the power plants have fully contracted, and add to that there's some ECs who also contracted from the diesel plants. So how do you resolve that issue when everyone is up and running?
Yeah. So, well, first of all, we're still hopeful and confident that the spot market will come to being, in the next, I don't know, October is the latest estimate, but certainly in the next year and a half, hopefully the market will be there. So at least you have a clearing house, because right now it's difficult. Sometimes plants will have to go on a forced shutdown because you don't have this clearing mechanism. So that's number one. Number two, at some point the government will have to view this as an opportunity, and I think there's talk about the hydro. Is this the right time to rehab because you have oversupply? So hopefully that will help smoothen the situation, at the same time prepare for long term. Because there's siltation in the hydro, it takes time to address that. Number three, the transmission link. I think there's momentum and seriousness in terms of implementing that Visayas-Mindanao link. According to NGCP, if my memory serves me right, 2021, maybe 22 is the expected timeline to make that link live. So, number four, there is, Tony Moraza from Aboitiz keeps on asking me to show proof of my theory that there's pent-up demand in Mindanao. I believe there's pent-up demand. We have yet to see that double digit. The expectation of some quarters is that Mindanao demand will grow because you limited the demand to 1.5 gigawatts for the past 5-10 years. And yet the economy is growing and there's a lot of investment, infrastructure, etc. So there's gotta be a kick in the demand. It's a matter of when. I still stand by my view that there will be above average demand in growth in Mindanao, not your 5-6% that we see in Luzon. And that not all diesel is contracted, and certainly not long term. So over time, those will fall off. The way we view it is there's going to be around 2,000 megawatts of base load plants in Mindanao. It's only a matter of time that Mindanao hits the 2,000 megawatts. I think it's a 1.7, 1.8 range already of peak demand. So give it a couple of years, you'll hit 2,000 megawatts. So what will be what's above that is hydro, which could be rehabilitated or be on ancillary, and diesel, again, just on standby and let the contracts fall over time. No? So obviously, plants may have to cycle down the baseload. No, there's not going to be 2,000 megawatts of baseload demand. We're probably, years away from that. But as long as your coal plant can cycle down, that's why we also chose. It's going to be hard for circulating fluidized bed (CFB) plants to cycle down. They're not really designed to do that. No. But pulverized coal can go down. You should know. You've been doing that with Masinloc before. Go down to 50% or even 30% of the capacity. Obviously, it does impact. The impact is sub 10 centavos, per kilowatt hour, even on the third year of the maximum. So, from the point of view of competing technologies. Given the example that I gave in coal pricing versus natural gas, it will not spell the difference between winners and losers at that order of magnitude. No. So that's the sort of silver lining or good news for the coal players. No, it doesn't put them at a huge disadvantage. No. The diesel, medyo masakit because on a per kilowatt hour, it's bigger. No. 6 pesos per liter translates to 1 peso 50 centavos cost. That one does tell the difference. You already have the most expensive fuel, diesel, and then you're adding 1.25 pesos or 150 per kilowatt hour. That really puts diesel at even more of a disadvantage. It hurts diesel more than it hurts coal from a mix or technology fuel perspective. That's why while we're looking at diesel, to be honest, that's the impact on us. I know I talked about peaking ancillary plant, that's diesel. This gives us more challenge. So I think on the customer side, obviously, it all adds up. Even if it's just 5 centavos, 10 centavos, you have all the universal charges, feed-in tariff, coal tax, etc. It all adds up. So obviously, but it's a choice. Someone's gonna fund. It's arguably a consumption tax, effectively, not just a carbon tax, but also a consumption tax, and we all gotta contribute somehow. So that's a judgment call, and we simply have to live with that, I guess. So.